Assalamualaikum warahmatullahi wabarakatuh, and good morning I bid to Mr. Azam. We are from Group 5 from AC30. We'll be presenting about Satyam Computer Services Limited India Accounting Scandal. My group consists of three members, which is me. My name is Elizabeth Abdul Aziz, and the other two members, Namda Nuhanis and Norifani Dini. I will start off the presentation with the overview of accounting fraud. Accounting fraud is the purposeful manipulation of financial accounts in order to create an illusion about a company's wealth. To a company, it's very important to have a high company wealth in order to attract more investors. Usually, accounting fraud is made by the employees or by the top management, which is the board of directors. And the some common methods that they use to commit accounting fraud is firstly, overstating of revenue by recording fake sales and inflating the value of existing sales just because to have more sales than the actual one. And second, understating expenses, which is hiding expenses, classifying them correctly, or simply not recording them all. And lastly, they also misrepresenting assets by overstating the value of assets, which is property or equipment, or by hiding liabilities such as debts or loans. The accounting fraud usually happen in a big company because they want to meet the analyst expectation. I will continue for the second part of overview of fraud, which is factors that contribute to fraud. First one is Blackstone at the top. And Luton's at the top is the dominant ethical climate set by an organization leadership. It's the unwritten set of rules, values, and behaviors that guide decision-making and employee conduct throughout the company. It's cascading down from the top. The key element of tone at the top is such as leadership commitment, which is transparency and open communication. Second, risk awareness and mitigation, and also accountability and consequences. The tone at the top work as an invisible conductor of the company's ethical symphony to create a culture of integrity, trust, and long-term success. Thus, if the tone at the top is lacking, the trust, the integrity will also be lacking. Um, Thus, the employee doesn't have an integrity and honest, and they are not honest in their work. Okay, next move to the second factor that contribute to fraud is asymmetric information. The term of asymmetric information simply refers to the fact that two parties participating in a transaction or contact have varying amounts of knowledge of or information. It is normal because if there are two-person, two there will be two like there will be two preferences or idea. This imbalance can be substantial, resulting in an even playing field and possibly unfair benefits or disadvantages. To manage asymmetric information is fundamental challenge in the auditing process. This is because auditors aim to bridge the information gap by obtaining sufficient, appropriate audit evidence to provide reasonable assurance that the financial statements are free from material misstatement. The audit process also involves a combination of inquiries, observation, inspection, and analytical procedure to independently assess the accuracy and completeness of the financial information presented by the management. So, when there is asymmetric information, there will lead to accounting fraud because differences because of the differences of information. Thus, it's important to auditors to make research, to have an information that accurate. Next, done with the asymmetric information, the third factors that contributed to fraud is the role and responsibility of board of directors. In the context of agency theory, the board of directors plays a crucial role in mitigating the principal agent theory. The role and responsibilities of of directors, including monitoring and oversight the financial performance, which is management activities such as the board oversees the management team's action, including strategic decision, risk management, and ensures the company has strong internal control. Second, the responsibility of the board of directors is resource allocation and strategic guidance. For example, investment decision, risk management, and strategic direction. Third, board of directors also responsible in addressing conflicts of interest, which is they should have significant number of independent directors who can objectively represent shareholders' interests. Any potential conflicts of interest should be disclosed, and they should set and enforce the ethical standard for the management and company. So, thus, if the board of director neglecting their role and responsibilities, there will be a bigger chance of accounting fraud made by the employees or by the top of management. This is because they play a very important role to shape the company. Next, factors that contribute to fraud also causes by human biasness or personal interest. Personal interest is the individual motivation and objective of the agent, which is the person or entity acting on behalf of another, that may not necessarily align with the interests of the principal. Principal is the person or entity for whom the agent is acting. The recognition of personal interest is central to understanding the potential conflict and challenges that can arise in principal-agent relationship. For example, the agent incentives such as compensation structures or performance bonuses may be designed in a way that encourage actions that serve agents' personal rather than the best interest of the principal. Lastly, fiduciary duty of board of directors also contribute to the fraud. The duty of board of directors encompass a three-pronged approach which are care, loyalty, and obedience. Obedience deserted. This is because the board of directors act as a trusted steward bound by a legal and ethical oath to prioritize their best interests above all else. Like a vigilant shepherd guiding their flock, the board of directors, through their unwavering fiduciary duty, navigate the company towards long-term prosperity, safeguarding the investment and livelihood of those who depend on their wise counsel. When they neglect the fiduciary duty of board of directors, this will be open a chance to accounting fraud because there's no people to safeguard the investment. As we can see, there are five factors that contribute to fraud. And done with the overview of the fraud, we will move to Nabila and Hanis to present the next part.
Thank you, Aziza, for the explanation about the factor that contribute to fraud. Okay, my name is Nabila Hanis binti Muhammad Sabri, and I will continue presenting about the how the fraud happened the Satyam Computer Services Limited India. The Satyam Computer Service Limited fraud, one of the largest corporate scandal in India, which is a come to light in 2009. Satyam was a prominent IT service company founded by the Ramalinga Raju. The fraud was perpetrated by the Raju and some key executives, leading to massive financial misstatements. Here's a brief overview of how the fraud evolved, which is Ramalinga Raju, who is the founder and then chairman of the Satyam Computer Service Limited, was the central figure in this fraud. Several other top executives and members of the company's management teams were also involved. This fraud primarily involved inflating the company's profit and asset, creating the false picture of its financial health. Raju admits the manipulating the company balance sheet by overstating revenues, inflating profit, and creating fictitious assets. The fraud amounts to approximately $1.5 billion, making it one of the largest corporate fraud in India. When these frauds happened, the fraud was ongoing for several years but was publicly revealed on the January 7, 2009, when Raju confessed to the financial irregularities in a letter addressed to the company's board of directors. Where these frauds happened, Satyam Computer Services Limited, headquartered in Hyderabad, was the epicenter of the fraud. India. That's all. How it was the perpetrated. Raju and his associates engaged in the financial manipulation by inflating revenue figures, inflating employers' numbers, and creating false invoice, fake bank statement, and non-exist cash balance. They created 7,000 fixed salary accounts and bank statements to deceive auditors and investors. Despite being responsible for auditing the company's financial statements, PricewaterhouseCoopers (PwC) fails to detect the fraud and claiming they were misled by the Raju and the management. The concealment is the fraud was concealed through the false documentation, forget a bank statement, and lack of the transparency. Auditors fails due the diligence and Raju admits the doctoring financial record to maintain a successful company. The revolutions come when the Raju confessed the falsifying the company's balance sheet and inflated profit. The Satsam scandal had a several reputation, leading a legal action and the sale of the company, and also increased the scrutiny the corporate governments and auditing practice in India. Raju and the other key individuals involved in the fraud face legal consequences, and the incident has significant impacts of the reputation of the India's IT company industry. So that's all for me for this part. I will pass this presentation to the next presenter, who is a Norai Fanadini, to continue this presentation. Thank you.
Assalamualaikum. My name is Naraifa Narini binti Muhammad Azhar. I will present about the pressures, opportunities and utilization preparating the fraud. In the Mr. Ramalingaraju, the founder of the company experienced pressure to uphold an impressive financial performance. Second, the case sheds light on the burden placed on top level management to meet the demands and expectations management expectation of stakeholders such as investors, analysts, and shareholders. This case serves as a reminder of the repercussions of succumbing to pressure and justifications, emphasizing the need for organization to prioritize integrity and ethical behavior at every level of management. For the second is Mr. Ramalingaraju had opportunities to carry out their deceitful actions. This was primarily due to a lack of transparency and proper supervision within the company. The case brings attention to now fraudulent activities were made possible through the manipulation of statement and sagging in self-transaction. In my opinion, this provides a strong as to why organizations within the region need to have robust internal checks and effective confinements, which can help eliminate uh, the chances of corruption within society. For the third is the rationalization of people committing the fraud, especially Mr. Ramalingaraju, is cited which the individual needs of enrichment, power, and success. The case shows the reason behind doing unethical things for self-enrichment and prestige. The case illustrates the necessity of the existence of such rationals emphasize why organizations have no option to be very ethical in their operations. It also highlights the importance of regulation and audit as deterrence against such activities. For the next is I will present about the consequence, effects, and penalties imposed. For the auditors is PwC took some dire results from auditing as they are among the auditors cases against were numerous, leading to the suspicions of business operations, and it had adverse effect on the corporate profile of the company, and it suffered lawsuit and monetary fines. For the company, due to this incident, the reputation of the Satyam was completely destroyed, with the result being an outgoing flow of consumers. For the management, the accused management faced criminal charges of fraudulent activities like criminal conspiracy, breach of trust, and forgery in the courtroom. For the shareholders is shareholders experience substantial financial losses. As a result, there was substantial destruction of both shareholder value and confidence after the fraud and disclosures. For the next is any relevant parties, apart from causing negative effects on the Indian economy, the scandal also impacted Indian stock markets. The uncertainties also affected Satyam clients and partners, and there might have been problems with cash flow for its suppliers and vendors.
Last but not least, we will move to the conclusion. From the Satyam Capital Services Limited accounting scandal, we can learn that Satyam, a major Indian IT company, have committed the country's biggest corporate accounting scandal, where the founder and the owner of Satyam Computer Services Limited, Mr. Ramanlinga Raju, have admitted overstating assets by 1.47 billion dollars, have shattering the investors' trust and causing billions in losses. This highlighted the problem of unreliable financial information and ethical lapse in cooperation that impacting markets and India image. This led to in bad India image to the other country. Undoubtedly, numerous sorts of frauds and scams have lowered the credibility of financial information used by investors to make judgment. It also had a role in the current financial crisis, threatening the efficiency, liquidity, and safety of both debt and capital market. While a reminder of past financial crises, the scandal underscores the importance of ethical conduct to curb white-collar crimes. It also can make other company learn the scandal, from the Satyam scandal, from the cases of Satyam Computer Services Limited, other company or other top management can must avoid in committing accounting fraud because it will lead to company bankruptcy, just like Satyam Computer Services Limited.
Next is wisdom in this case. For the completing this assignment has reinforced the importance of vigilance, oversight, and ethical conduct in the corporate environments. The Satam scandal served that as a stark reminder that even well-established companies with a seemingly solid reputation can be susceptible to fraud and manipulation. The key for takeaway is this critical needs for robust government structure, transparent financial practice, and an unwavering commitment to ethical behavior. Trust that a corporate world is fragile and maintaining it requires constant scrutiny, accountability, and a culture that prioritizes integrity above all else. Thank you.